Hello everyone, welcome back to Stock Spy. Today we are diving deep into a topic that's become increasingly popular among the Indian investors. Why should Indian trader invest in the US stock market? If you have been wondering whether to look beyond the Wall Street and take a bite out of Wall Street, stay tuned because by the end of this video, you'll have a clear idea of why US market is an attractive opportunity for Indian investor and how it can actually help grow and protect your wealth. So let's get started. First thing is the global diversification. One of the biggest reasons Indian traders should consider the US stock market is its diversification factor. Think about it. All your investment in India are tied to one economy, one currency, and one political system. What happens if the Indian market faces a downturn? Your entire portfolio takes a hit. By investing in US, you're spreading your risk across two of the world's largest economies, India and the United States. Even if the Indian markets are down, your US holdings might stay strong or even go up. This helps you balance your risk and smooth out your returns over a long term. Point number 2 is the earnings in US dollars. This is a smart angle that most people miss. Indian rupee has historically depreciated against the US dollar. In 2000, 1 USD was about 45 rupees. Today, it's around 83. That means if you had invested in the US stock 20 years ago, your returns would be boosted just by the currency appreciation. Investing in US means your asset grew in dollars, which is one of the most stable and the biggest reasons why Indian investors are looking westwards. The US stock market is home to tech giants and global innovators like Apple, Amazon, Microsoft, Google, Tesla, Nvidia, Meta, etc. These companies are world leaders, driving innovation in AI, electrical vehicle, cloud computing, and e-commerce. Many of these companies don't even have competitors of the same scale in India. By investing in US, you get direct exposure to these global disruptors. Number 4, better access to thematic and sectoral ETFs. In India, mutual fund and ETFs are still growing, but in the US, there is a wide variety of exchange-traded funds that let you invest in specific themes: clean energy, robotic and AI, space exploration, cyber security, US real estate, etc. You can even buy ETFs that track the entire S&P 500 or particular sectors like healthcare, semiconductors, or fintech. That gives you a targeted exposure to a high-growth industry, something that's still limited in India. Point number 5 is the long-term performance and stability. Over the last 50 plus year, S&P 500 index had delivered an annual return of around 10%. That's impressive consistency. Also, the US market is one of the most transparent, well-regulated, and liquid market in the world. Companies are required to follow strict accounting standards and report quarterly, giving investors more confidence and clarity. If you are a long-term investor, the US market has a proven track record. Another point is a very convenient timing for an Indian trader. This is more of a fun advantage. The US market opens at 7 p.m. IST and closes at 1:30 a.m. IST. This means that if you're working 9 to 5 job, you still have the time to analyze and invest in the US market in the evening, which is perfect for busy professionals who can't monitor the Indian stock market during work hours. Now, the tax and regulation awareness. Before you rush in, a quick note on the taxes. Under India's liberalized remittance scheme, you can legally invest up to 250,000 per year per individual in foreign assets. However, there is no long-term capital gain tax exemption like in India. All gains from US stocks are taxed in India as per US slab. Also, dividends from the US companies are taxed at 25%. But thanks to the double taxation avoidance agreement, you won't be taxed twice. So yes, there are some regulations to follow, but the process is fairly straightforward, especially with brokers that specialize in US stock assets for the internet investor. Now, the platforms that offer. Today, there are platforms like INDmoney, Groww, Vested, Stockal, HDFC Global Investing that allows you to invest in US stocks with just a few taps on your phone. You don't even need a US bank account. Fractional shares are also available, so you can buy $10 worth of Amazon stock even if one share costs over $3,000. And as a bonus, you can learn global investing tactics. Investing in US market teaches you to think globally. You'll understand how global economics work, how tech trends are evolving, how US monetary policy affects market. This builds your knowledge, sharpens your skill, and turns you into a smarter, more well-rounded investor. So, just a quick recap. Here is why Indian traders should consider investing in the US markets. Global diversification, USD-based returns, access to innovative global companies, better ETFs and themes, strong long-term returns, evening trading hours, easy digital access, knowledge and growth. Of course, always invest wisely and do your own research. US markets have immense potential, but like any other investment, they also come with risks. If you want a beginner's guide on how to actually start investing in the US stock from India, let me know in the comments. If you found value in this video, like it, share it, and subscribe it for more smart investing content. Thanks for watching. Until next time, keep learning, keep growing, and keep investing. Thanks a lot.